The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 439, Nasdaq up 218, S&P's up 47, gold contract on $5, trading at $17.17 an ounce. We have silver up 23 cents, $15.41 an ounce. Light sweet crude, quite a bit out here. We're going to have oil numbers this morning. You're up $3, $15.40 a barrel. Notes and bonds. You got the 10-year right now up 7 ticks, trading 139.08. The 30-year up by 20 ticks at 182.15. And King Dollar right now trading down 170 at 99.696. The euro's at 108. The yen is out here at 106.5, and the British pound is at 124 to $1 US. Tom O'Brien, what's going on?
Good Wednesday morning. We got enough action going on out there today?
We have action going on. We got Google up $94. You're trading out here at $13.27. You are talking big numbers. No two ways about it.
They had some strong numbers, man. They beat by almost $1 billion on revenue last night, right? Not bad for the numbers that the market was worrying about. Definitely, some worst case scenarios completely avoided as Google revenue. They missed on earnings, but just big numbers, man.
And I'll take gross revenue going up anytime, man.
Especially with a company like Google, right? They're going to figure it out for their profit-wise, man. Yeah. If Google keeps growing, they're all set. Exactly.
Totally. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Think of swim as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market. Option strategies, defined risk in this high-risk market right now. Great program. If you haven't test-driven yet the Thinkorswim platform, real easy to do. You're sitting on the site right now. Hit that banner, bring it up. You'll be able to follow Kevin and his team every trading day as they put on trading strategies in the most wonderful time of the year. Kevin Hinks, what's going on?
Tommy, you're right, Tommy. Could there be enough things to talk about and trade with today?
Seriously.
It is just amazing. And not to mention everything that was scheduled to come out and is still scheduled to come out this afternoon. You've got the Gilead news that dropped at 7:30 right when the GDP data hit. Incredible news.
Yeah.
For, the roller coaster that they've put on, they gave this market another 200 points in Dow points. I mean, basically all the profits that were in this market, the green side percentage-wise doubled when that news came out. So pretty incredible morning so far. And, these numbers on a day like this, you've got a relief rally going on in Boeing. You had Pfizer announce a potential vaccine yesterday around 11 o'clock Chicago time, probably noon around your guys. And then Gilead today. This market could go, guys.
Yeah, it's pretty amazing, Kevin. Coming off this bottom. I mean, we got the cash S&P. Right now. I mean, you talk about an expansion, man. I mean, we got lows that were laying out there, folks, at 21.91. Well, you're like almost 750 points higher than that. We're 29.24. I mean.
Yeah.
That's
exactly.
Yeah. It's a.
And you've got everyone, Tom. What I love? Everyone loves to say this is not going to be a V-shaped recovery. It's going to be, they're naming a bunch of letters, L or J or something else. And people are going, we're going to retest the lows. No, we're not. There. Now it's on the record. We're not going to go retest those lows. Not with what's going on with 70 companies trying to get a vaccine for this virus. And, oh, by the way, 0 interest rates and the Fed completely on board.
Yeah.
I think the lows are in, period.
Yeah, no, I definitely agree with you, man. I think, can we pull back to a breakout area? Maybe, but I don't see those lows. I guess one of the big things that I think we're all going to be talking about going forward is that we know that the Fed is on board like in an incredible way. And when you look at the sequence, even if you go back to the 80s, you had the Fed put with Greenspan, you definitely had it. Now, it's really a question of, like, what else are they going to buy? I mean, because it looks to me like they'll buy anything that is getting in price destruction. I mean, it's kind of at that level. If it's spread across the United States, that's not basically, some smaller corners, but that's a big deal because we all need credit. That's the other side of this, man. I mean, there's no two ways about it.
I'll tell you though, think about this, Tom. Think about the reaction to the 2007-8 financial crisis.
Yes.
And then think about the reaction to this one.
Yes.
And you may make a case that everything they learned there, they did better here. They learned the lesson the first time and executed it better this time. But Jerome Powell, he's going to have statues.
I agree.
For him, how well he's done this.
Yeah.
I mean, he's learned, I think the big mistake, and believe me, I was trading in 2007-8 during this, was they kind of hesitated and double clutched and didn't go hard fast enough when this economy needed it. And these guys, well, you can't say that about Jerome Powell. He went, he didn't go shotgun, he didn't go bazooka, he went aircraft carrier filled with bazookas.
Well, you know what I think is cool, man, is that, and this is where, his history, and I'm not putting academics down, but he really didn't come from that deal. I mean, he came from the markets, which helps us tremendously, right?
And academians, good or bad, they like to have meetings and they like to talk. Business people make decisions.
Right,
and he pulled the trigger quickly.
It's pulling the trigger. What happens, folks, when someone's the downdraft is as fast and furious as we had. The bottom line, and this is where the trading background helps tremendously. It's like, hey, it's got to be done right now because we all know, specifically in the markets, if people run out of cash, you can have a great business, but if you run out of cash, that business gets destroyed, then jobs get destroyed, then communities get destroyed, and,
liquidity.
Yeah. Yeah.
Right, and that's what they provided. That's what struggled in 2007 and 8. That's what they provided here was liquidity, as much as the markets needed.
No doubt. So
now, how do you unwind it?
Listen, that's gonna be a whole nother story, right? Yeah.
That's right. That'll be the second version of his book, How to Unwind It.
Yeah. No, totally. And earnings. I mean, the bottom line. Where you guys going to be talking about today? You get plenty of numbers out here, right?
Yeah, Microsoft and Tesla.
Yeah.
Today. There's the two we'll go over. And then we'll be on later, obviously, with the Fed show, as you guys will. But, today on Fast Market, Microsoft earnings and Tesla.
Yeah, I got Tesla up there. How about almost a $70 expected move for Tesla? Yeah. Should be some exciting action on that, right?
Exactly right.
Yeah, $70. You got to love it. Yeah. Listen, folks, 45 minutes from now, outstanding program. You want to understand option strategies. This is a great time to listen, folks, because as Kevin and his team sets it up, we know that the numbers are going to come out. As soon as the numbers come out, the vol gets crushed. Bottom line, if you understand what type of strategies are set up coming into it, check it out. Kevin, you have a great day, a safe day. Tommy and I look forward, as the rest of the Tigers and Tigresses, to the program in 45 minutes.
Thanks for having me on, guys. Have a great day.
Thank you.
Thanks, Kevin. You too.
Stay right there. Tommy and I come right back. Dow's up 375, Nasdaq's up 213, S&P's up 41. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 420, Nasdaq's up 230, S&Ps are up 46. Let's go to Jim in Denver, Colorado. Hey, Jim, what's going on?
Tommy and Tom, how are you guys?
Oh, it's Tim. Tim, what's happening, brother?
How you doing?
I'm doing great, man. Yourself?
Good.
Good.
Riding the wave.
Riding the wave. So
times, but we're surviving.
That's good, man. That's good. So, are you digging your paws into this gush?
I've been yeah, should I move this thing out or keep riding it? What do you think?
Let's take a look.
I need an expert view on this.
Gush, folks, is the direction. S&P oil and gas 2 times leverage. Trading $35 right now. Inside of this baby, it's the oil and gas business in general.
Yeah, it's kind of the expert, as well as the XOP, the XOP, so.
Yes, so let's take a look at this. I got to bring this, look at this thing. This thing got so destroyed, it looks like it hasn't even moved off the bottom. I mean, this is so weird, man. You look at this chart, folks, and it goes like from $1,600 down to $12. Let me see. I got to do this.
Well, they did a couple reverse splits.
Yeah, I get that.
Yeah.
Boy, this is... Okay, so, well, you got another ABC up here. 1 second. So that B point's 34. The A point, oh, my God, is 27 at 46. Let's call it 28. 34, $6 gets you, well, I see what's happening here. So you just finished up another ABC up to 36. What is the what is this trade off of, Tim?
XOP.
XOP?
Yeah, which is a spider exploration.
Okay, I got it. Okay, cool. So this will give you a better understanding of what we have here. So the XOP.
Technically not. It follows oil pretty good, but not. I mean, the oil could be up and it could be down depending how the.
Sure, because these are the equities that have come off the bottom. Oh, okay. Now I got a much clearer picture. Yeah,
I'd like to keep riding it, but it's like, man.
When I look at the XOP, it'd be saying, "Go, move it, man." Yeah. This has come right into ICE, which is $50.84, and you can see the volume dying on the vine, man. Because the XOP can pull back to 45, 50 pretty easy. You know what I mean? That
right.
You can see from that point. So, you know, I mean, the way I do now, what happens when you have something like this? What I do, Tim, and this is what you can do. I'd put a stop right really close to it today, right? Because what happens, folks, is this, is that it's wicked when you get a stock that's going up like this. So instead of just selling it, like it's at $35.75, right? You could say, hey, the heck with it. Put a stop at $35.25. Only give 50 cents, and that's it. Do you see what I'm saying? And if it keeps riding $4 more up, great. You grab it and just keep bringing it up, and then I'd move it by the end of the day. That's what I'd do.
Thanks, man. You guys hanging in there? You doing good?
Yeah. I mean, you know, it's not been bad down here. What did happen, unfortunately, yesterday is that in Florida we had the highest death toll yesterday. They're saying we're past the peak, but I don't know how you get past the peak if we had the highest death toll yesterday. You know what I mean? So
I'm hearing that around here too, kind of, and I'm like, I guess, you know, they know, I guess, but you guys be safe.
You too, man.
You too, man.
Okay. Have a great one, man. Have a safe one. Oil, Tommy, right?
Yeah.
Whisper number. Let's see what we got.
From Gush to oil, man, we got the inventory numbers in 8 minutes. What are they looking for?
They're looking for, the whisper number is, what, that's 15 million barrels.
15 million.
The whisper is 11.9.
The survey is 11.
Survey, 11.9.
So analysts at about 12 million. The whisper at about 15. Big numbers, man, for sure. Jumping back to, I was checking this out. So right now you got crude at $15.55. Huge volatility priced into these products, as you may expect, right? If you jump to the noon expiration, we do have a contract with $15.50 just to price in what they're looking for. Okay. You're only 5 to 7 pennies above there, right? So your bullish one's going to be a little bit more expensive. You're looking at $44. The bearish one, $37. You're still talking about $81 to make a max profit of $150. If you only let one expire. Now, keep it in mind, though, that you could see some volatility and have both of these expire, as in trade out one, maybe trade out the other, but a lot of volatility priced in, man. When if you want to buy both sides of this market, you got to put up more than $80, which represents 80 cents of movement. Ooh, and keeping in mind, you only have $1.50. That's why I said, really, you better have, not you better, right? If I was going to trade these, I would be looking for volatility in both directions. I would look to take money off of the table on one side and maybe look for the other side to come in as well. Because if you're just looking for value on one side of this trade, that's a lot of premium, 80 cents that you would need of movement to break even. And then you only have 70 cents of potential profit above that 80 cents of movement, right?
Yes. Yeah. No, it's a monster number. Yeah. So I'm thinking I'm going to put in 18 million barrels here. I'm going to go over the whisper number.
Okay, perfect. Put it in.
Let's see.
Now, one other one I'm just going to bring up for interesting volatility. If you are bearish right now and you wanted some defined risk, I mean, this is basically at the money put. Right, you have $15.50 being the ceiling. Okay. You have until 2:30 is going to be your time that you have until, and you're going to have to put up 65 cents. So you're selling it at $14.85. Your losses are capped at $15.50, and you have exposure all the way down to $10.50. And man, it's pretty remarkable to say that it's actually possible you could get $10.50 by 2:30 in the afternoon. Normally, you would never say that, right? In this environment, it actually is, man. Not to say it's going to happen. I found a little bit of a bid over yesterday for sure, but we'll see what happens when we get those inventory numbers at 10:30.
Pretty amazing, man.
Yeah.
And if we take a look at some of the higher volume equities out here today, and there's no doubt, folks, the S&P is moving. You got Advanced Micro, which is down $1.50. You got Carnival's up $1.50. Delta's up $2.30. You got Boeing up $5.27. Facebook's up $11. Let's go take Apple's up $9. Look at that move on Apple. Holy cow.
Yeah, I think Google putting a bid across some of those equities in terms of if people are on their phones, if people are relying on the cloud, if people are still, I imagine that's correlating to some. Microsoft after the bell they're getting a bid today as well.
Right.
Facebook, maybe Facebook advertising, right? Just in line with Google, probably in terms of.
That's after the bell today too.
It is, yeah.
Yeah, so you get Facebook.
It's remarkable.
Off the lows of 137, you're at 193. So Facebook, this is pretty wild, man. Facebook is back to where we were in November.
Not bad, man.
No, it's well, look at this. It's actually, on a longer-term basis, yeah, it's in the same consolidation that it's been in, man. This is pretty amazing, man. There's no doubt. If we go take a look inside the NDX 100, because the NDX is trying to get to its highs of yesterday. Haven't made it yet, but it's right next to it. The leader out here today inside the NDX is United. Have no freaking idea why United is the leader.
It was the leader yesterday, too, right? You know what's really funny? As you went to pull that up, yeah. I remembered you had United. I went to check out United before you even pulled that up, and I was like, whoa, United's up 11% again today. They just went from 25 to 31 over the last 2 days, man.
Pretty amazing.
Yeah.
0 people on the plane. Did you see the pictures? 1 person on the plane, folks. It's pretty cool how you get your own private plane. Stay right there. Right. Tommy and I are going to be coming right back at those oil numbers. Hi folks, this is Tom O'Brien. On Thursday, April 30th, I'll be holding an all-day online seminar where I'll teach the essentials of my trading methodology, Timing the Trade. From 9 a.m. to 4 p.m. Eastern Standard Time, with a lunch break from noon to 1, I'll be covering quality volume, ABC structures, Fibonacci confluence zones, cause and effect, swing points, and much more, all while the market is open in real time. When you sign up, I'll mail you a copy of my best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. You'll also receive a free month of my daily trading newsletter, Market Insights, a $169 value. This 6-hour online seminar will be archived if you can't attend the entire day live. My Timing the Trade webinar is taking place Thursday, April 30th, so don't wait to sign up. For all the details and to sign up today, visit the front page of TFNN.com.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Small number, man. Crude inventories rose 8.99 million barrels. Yeah.
I was going to say, is crude going to find a bid, man? A little bit of a pop. We were trading a hair above 1550, right? As we inch towards that number, we saw the price increasing a bit. We're trading right now 1580, call it. So up a bit. For some context, though, The noon expirations, they were making us pay about 80 cents if we wanted both sides of action. Even if you were just going to go bullish, right, you needed to pay 40 to 45 cents of premium for that contract. And remarkably enough, man, we're right at 15.60. No real action on that number just yet.
And gasoline fell 3.67 million barrels.
Okay.
So that's a decent number, man. I mean,
it's remarkable. The market was looking for 15 million, maybe 12 million, depending on which one. We get 9 million, and the price is now under where we were coming. We're just right at where we were.
No doubt. Let's go over to those NQs. So the NQs, folks, bottom line, they're going for the highs of yesterday. You're right next to them right now. The highs of yesterday out here was 89.45. We've hit 89.39 right now. Bottom line, we'll see if this, can basically get it going. What you have, this is going to get really interesting because what we have, that being said, is that when we had that little downdraft at the very beginning of the market out here today, 88.16, that baby has volume down there. So this is going to be intriguing watching how this whole thing shake out, man.
It's interesting, too. I was looking at, if you look right, the NASDAQ not even up to where we were trading in terms of 89.45. Yesterday's action, we're at 89.34 right now. But all the other markets in terms of the S&P, man, far above the high we had yesterday early, and the Dow even above that level as well.
Yes, no, big time. And, hey, we got the small caps, folks.
Totally.
Okay, this is pretty amazing what the small caps have actually done. I mean, they caught a bid, and you got to remember something. Small caps, folks, had never gone to another all-time high. Its all-time high was July of 2018. Yet the IWM did come off the lows of $95, and you're at 133. So
okay,
it's pretty intense, man. Let me just see here. Yeah, I mean, it's getting back inside the downdraft of 2018. It's back inside it right now.
Hey, so how about with all this market action, let's talk about what you have going on tomorrow, man. You think we got enough going on for a Timing the Trade all-day webinar in action right now, man?
Yep. And, folks, okay, so if you come over to our website at TFNN, bottom line, you'll see it right under featured content. We're going to be starting at 9 o'clock in the morning. We're going to walk you right through the timing the trade, bottom line quality volume, swing points, ABC structures, building cause, all of the above. We're going to go from 9 to 4 in the afternoon. We'll go from 9 to 12, 1 to 4. Inside of this webinar, what will end up happening is that I'll be going through the slides of how quality volume works, how swing points work, how price and volume work, and then simultaneously we'll be into the live markets, which is pretty cool. What happens, folks, is that you can get to understand it much better because the markets are moving simultaneously, and it doesn't matter whether you're on a 10. We'll be using 10-minute charts because that's what I use forever, showing you how you should be looking at swing points, how you should be looking at ABC structures, all of the above. So it's $395. What you get is you're going to get full day of great education. You can go over it as many times as you want. You're going to get the book, which is $88. You're going to get the newsletter, which is $169. And if you can't make it live, bottom line, it will be archived. So we're going to be out there growling and prowling live.
Can't pick a better day, man. You're going to have Fed action today. You got all the FANG stocks with their earnings. We got some big earnings after the bell tomorrow as well. Apple and Amazon after the bell tomorrow, right? Microsoft, Tesla, Facebook after the bell today. It's just crazy.
Yeah, and if we go to Microsoft, I mean, Microsoft, folks, it's up $4.95 right now. They're going to be looking for $33.6 billion to the top line, $1.28 to the bottom line. And, this was the strongest equity on the way up on a consistent basis. It has an all-time high of $190. So we'll see how this baby shakes out. But,
I'm a big believer in Microsoft, man. Even if you look before the pandemic collapse hit, right?
Right.
They had their earnings, the last earnings they had, January 27th, a week of. huge earnings, man. Nothing to do with the pandemic there, right? It was the continuing to grow the cloud. You traded from 160 up to 190 the week of January 27th up to the week of February 10th. So, you back things up to before all of this started, and man, oh man, talk about an acceleration, right? You were up almost 20% from 160 to 190 in 3 weeks before this collapse. And I imagine this is not good for almost any business. There's some over the next year maybe, but this is just accelerating like we've talked about, man. I mean, Microsoft, we talked about the NFL draft last weekend, Microsoft Teams, the technology behind all of that. Schools are using that for students accessing. It was just a seamless. The NFL draft, it was remarkable that I found myself saying, my goodness, look at this production. And nobody is in-house. And then I found out on Monday that it was Microsoft behind it all, and it didn't surprise me, man.
Because I didn't even know they were in that business.
Yeah.
And because what does happen is that all small business. Well, I don't know if all small business, but we use it a lot. In this subscription-based type of business, folks, is very inexpensive for the value that you get, I think. I mean, it's you pay it every year, but you get updated. I mean, we all have.
And you're talking about the Office, Microsoft Office, and with that, right? You're getting Outlook, you're getting Excel, you're getting Word, you're getting PowerPoint, and you're getting access to the cloud if you want it. And that doesn't even begin to talk about how businesses are going to be able to use the technology behind it all. In terms of that type of remote capabilities, everyone has a camera on their phone, if not on their laptop. You can do all of that remotely, seamless meetings. They have the cloud infrastructure, and it's accelerating it all, man. And, Google was worrisome because, man, what if ads really do slow down a lot? We talked about those bookings.com, right, from 4 billion to 1 billion or something. Microsoft not really as open to that type of a pain, and it doesn't look to be as bad as they thought anyway, but they're just picking up, people at home needing to interact electronically.
And I think more people use their product because more people now, I mean, we've always been attuned to computers, our businesses' computers. Yeah. But people that aren't, now, when they realize that, okay, I need more equipment, I'm going to be on the digital line, and I think what you're going to see is very large companies are going to absolutely have to have at least half their workforce set up that they can be at home. Yeah, that's going to be a big number, man.
And I think, like we've talked about, they've basically, the workers and companies have figured out that they can work from home, at least in a capacity of 1 day, 2 day, 3 day, 4 days a week, right? Whatever it is, or just some positions, 20% of the workforce, 50% of the workforce, wasting time, money, energy, all of that by being in an environment that's an office when you don't need to be right now.
Yeah, pretty cool. Dow up 429, Nasdaq up 247, S&P's up 49. Stay right there, Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 464, Nasdaq's up 249, S&Ps are up 52. Let's go over to our man, Mr. Teddy Kegstad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Kegstad, what's going on, brother?
It's a quiet Wednesday as we're waiting on the Fed today.
Yeah, so the bottom line is that what can we expect out of the Fed, right?
Well, I think it's more of the same, to be quite honest with you. And, we've been talking about how the volatility has been slowly dropping over the past few weeks and how we've been kind of looking for this to kind of stabilize a little bit. And I think we finally hit that flatline point now. If you look at the major currencies versus the dollar, like the pound, the yen, they're, besides having tighter ranges on a daily basis, they've really gone nowhere over the past 2 weeks. They went from wedging to just complete consolidation. Now this is the majors, like the pound, the Swiss, the euro. But when you still remember, we've been talking about a lot of your lesser currencies like the Turkish lira and the Mexican peso. I think that the bull is still there for the dollar, but it's starting to slow down. I think that it's topping, in a lot of those currencies. The peso, for instance, their coronavirus cases have gone up, not in a good way over the past couple of weeks. But the market itself is consolidated in the peso for the past month or so. So I think that we're pretty much at the extreme now with a lot of the lesser currency crosses. So your dollar strength, I think, is holding up because of that, So, and the dollar index, remember when we spoke last week, the dollar was still on a little bit of a bullish path and we were looking for it to kind of die out and start to hit the upper part or the lower part of a resistance zone. It did. And if you look at the dollar index chart and the euro versus the dollar or the pound versus the dollar, Canada, all the big ones, they're all starting to look like a reflection of the dollar index chart, either directly or indirectly, depending on the which side the dollar is on. And so this is what we've been looking for and talking about for weeks, that the market has absorbed all this stuff. And remember, we talked about the interest rate component a couple weeks back about how that's pretty static and frozen. So today we have a Fed day. What is the Fed going to do? You're not going to go, even though negative interest rates are not negative interest rates. People say the banks are going to lend you money. Well, no, it's because of the value versus taxes, inflation, and what have you. We're already at zero. Where are they going to go? Right. So I think that all they can do is give more, propping up, saying that, we're going to keep on to supporting the bond market, keep on doing these things until we get through this wave, so. And I think that's really where we're at, kind of in limbo.
Yeah, no, and I can see, so these currencies, man, currencies like to trend in a long period of time. So I guess the real question is that, the dollar's been trending up for a dramatic amount of time. Is this like a slight turn? I guess we don't know at this particular point, but that's going to get intriguing because I was watching, these not third world countries, but Brazil, that start turning, meaning currency got imploded, the rand got imploded, and they're starting to turn. We'll see whether it's just a retracement or, in fact, their perception would be people would start saying, "Hey, man, I think it's too overdone," right?
Right.
Yeah.
Right. And I think that's exactly what we've come to that point is that, let's just say that the coronavirus curve doesn't go up or down over the next month or so. What difference does that have to do with the markets now? They've already had the shock value. We went through that 2 months ago.
Yes.
And if you take coronavirus aside, let's just remove that from the equation. The dollar was a bull that was starting to struggle at the end of the year going into this year. So if we take the coronavirus part out, as we start to flatten the curve and come out, then by just going by that scenario, the dollar should retract, but I think in the short run right now, since we still have a lot of unclarity, uncertainty rather, that's what's holding the dollar up because it's still a flight to quality. Everyone is still looking for the US dollar as support. Everyone's still looking to America as a leader. We have Europe that's starting to come out. We're looking at the numbers from Sweden and Norway on how things are working over there in other parts of the world. And if these models are actually correct and the real, as we get more testing, if these things start to really show the real validity of where we're at now. See, 2 months ago there was too much ambiguity.
Right.
Now we have data, we have actual numbers to look at, and it's actually starting to fall into place more and more and more. And if this trend continues, well, then our baseline should be where we're at now. We'll stabilize and we'll return to where we were before the coronavirus. As far as currencies and interest rates and things, the equity markets, that's a whole nother ball of wax.
Yeah, it's so intriguing, man, that we're so lucky that the dollar is the reserve currency of the world, because if any other country ever used this much stimulus, we would, I could just picture us saying, what are they doing, man? The printing, the digital presses are going. We don't even have printer presses anymore, folks. We do, but the reality is that the central bank just hits a button digitally, bottom line, if Teddy owns the bank, I'm the Fed, Tommy's the Fed, you hit a button and all of a sudden, you get $1 trillion in your account that you can start lending out. You know what I mean? So it does get pretty wild watching this whole thing shake out. No doubt.
Well, think about the value of the dollar. We're one of the world's food producers. Could you imagine if we were in the opposite relationship and our currency was slammed and commodities were low? You could have China basically buy up our food supply and we'd have starving Americans.
Yeah,
in a free market.
It's a big number. I think we're all going to basically find out quite a bit about many different things, particularly about what is the value of a food chain, any type of chain, actually, right? Do you know what I'm saying?
Right.
In general, do you know what I mean?
Mm-hmm.
And then, of course, the dollar is a big one, man.
Sure.
I think folks that it's hard to comprehend, actually, as to how you can actually push that much money out and the dollar's still holding, but I can understand it because even though Europe can't get it together yet, these first world companies are going to have to push money out so that the whole thing doesn't collapse, right? Because then they're not going to collect anything, right? Yeah.
Correct. And we will have a retraction in the dollar. We don't want to have the dollar as strong as it is right now. This is a short-term thing that's good for the world, good for the U.S., but we need to have the dollar retract over the next 6 months to a year. This is not a sustainable thing for the dollar. It's not good for us.
No, it's interesting. Gold's hanging at the 1,700. The equities, however, man, are leading that gold market, man. These equities off the lows, they're up. A lot of them are up 100% already. You got Franco Nevada, which is one of the biggest streamers. That's at all-time highs, man. It's like, so that market is saying that this dollar is going to weaken down a bit. Either that, or the market is saying that they're going to stay into the dollar and they're going to pile more into gold. And gold's such a small sector basically that it has a big effect. You know what I mean? So.
And there's more room to the upside with gold than there is with the dollar.
Yes.
I mean, when you look at the index, like people who aren't familiar with the dollar index or how that gauges the value of the dollar, don't realize how expensive the dollar is right now.
Right. No. I'll tell you, if we went on vacation, we'd realize how powerful it is, wouldn't we? You go to Mexico, go to Brazil, and you'd be a multi-billionaire, man.
Yeah, right.
Teddy,
hopefully we have some signals for you next week.
Tell you have a great week, safe week. We look forward to speaking to you next Wednesday.
Thanks. You have a good one, guys.
You too. Stay right there. Tom and I come right back, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profit in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 482. The Nasdaq's up 250. S&Ps are up 55. And, you know, Tom, we were just talking about the aspect of Microsoft working at home and all the above.
Yep.
This is going to get really intriguing, folks, because the big banks, you know, Morgan Stanley was the first one to come out. They have 800,000 employees. Only 57,000 was working in the office. And their Gorman, their CEO, come out and said, hey, listen, man, this is working right. We're going to continue to have people working at home. Now, the second part of this, where it gets really dicey for commercial property and for skyscrapers.
Yeah.
Because how do you bring, and now what's going on, Barclays came on board. This is going right, Citibank came on board. They can't figure out, folks, how to get their employees up to the space because of the elevators.
No, and that's where, you're going to see people come back to a semblance of normal life, man. But it's going to take multiple years for anything close to these types of actions, right? Same type of thing when you talk about concerts, sporting events, any type of a bustling mall, right? Remember the mall? Remember the food court in the mall? Remember all that? I mean, all of those things are not going to happen in the next year or two, man. Before this is completely vaccinated or there's a treatment or something, starkly different from where we are right now. But that's crazy, seeing, something like elevators. But it makes sense, man.
Yep, it's pretty intense. So check out the number, folks. The number is actually incredible when you look at high rises and commercial property. It has in here in this article. So between Barclays. Oh, I got to get the number. Oh, anyway, it's a monster number, the amount of space that banks hold in high rises. And
I bet
the bottom line is that they're saying, hey, we can't use the space right now.
They're all going to be on Microsoft Teams. No, I joke. We'll see.
Well, listen, it's
possible. Exactly.
Stay right there. Think or Swim coming up next. Thanks, pal.
Thanks, man.
Go get him, folks.